Welcome to Classic Value Investors. My name is Mariusz Konieczny, and today I am very excited. I have on the line with me Robert Macleod, the CEO of Frontline. Robert, thank you for joining me.
Thank you, Marius, for inviting.
Yeah, so Robert, some people in the shipping industry obviously are very aware of Frontline. Others might not be so aware of Frontline. So can you give us a little bit of history of Frontline, how long you've been the CEO, and maybe what role does the billionaire John Frederickson play in determining business decisions for Frontline?
Yeah, absolutely. So I think, starting with Mr. Frederickson, I think that's certainly where we should look, and we should go back to the 1990s. That's when he bought Frontline. He took Frontline and listed it in the U.S. in 2001. Since he listed it in 2001, he's paid more than $6 billion of dividends. Mr. Frederickson remains the majority or main shareholder, with about 42% of the shares. We are since the sort of buying it in the 90s, it's steadily grown, and we have now approximately 70 tankers on the water. As for myself, I've been the CEO since 2014. Background was running my own company for 3-4 years, and before that I was with Glencore. When in terms of decisions and involvement, Mr. Frederickson is very much involved. He's now almost in his 6th decade in shipping, and quite an important factor is he's probably the only one that hasn't gone bust in that process. So 6 decades in the business, and I would say he's instrumental for the company's success.
So considering he's been around obviously for so many years, I wonder, has he seen anything like this before in terms of what's happening in the market?
That's a great question, Marius. He did mention a couple of months ago when things were at the sort of most extreme. He was like, I've never seen this, and I think the only sort of comparison would probably be the oil crisis in the 70s. But the roller coaster ride that we've been on so far this year has been extraordinary.
Yeah, that could be an understatement, right? Okay, so let's jump a little bit to maybe people are interested in the current situation. I know that in March you've been on Capital Link, and your view at that time during the shipping conference was that an unprecedented amount of oil glut was going to go into land and storage. But then later during the Frontline conference call, it appeared like maybe you changed your view or your mind a little bit and shifted it towards maybe more normalization and faster destocking. How do you see the situation now?
No, I think what you're pointing out is very important. And what I generally do, if I get things wrong, I like to just admit it straight away. And what I got wrong was that I thought that the oversupply of oil in the world was higher than what it turned out to be. I.e., I thought the demand was a lot weaker than what it turned out to be. I was also taken aback by the cuts that were seen in production. They were more immediate than what we normally see, and they were basically 100% compliant. So this meant that the oversupply was a lot less than what we and I think many market participants thought, and it's reflected in the oil price. I am staggered with the quick rebound in the oil price. I did not expect it, and this has changed the whole sort of environment. And as I said on the conference call here recently, I think we're sort of more towards a normal market now. We're going to see a summer market that I thought back on the Capital Link, I thought the summer market would be one of the most extreme and highest earnings market we've ever seen in tankers. That's now changed, but I'd like to point out that now June 2020, we are seeing on the VLCCs, we are seeing the highest rates since 2015. So back to your sort of where we are now. I think the market is obviously down quite a bit, but it's showing volatility and it's bouncing around, and I think that's going to be what we're going to have here over the summer. And I reckon the average is going to be better than what many are sort of the pessimists are pointing towards. It's still in the 50s on the V's, and I think when companies have made a lot of money, like tank companies have over the last few quarters, then I think people will be more stubborn on rates and they will hold out for better rates, and it's easier to say no. Because we shouldn't forget that the tanker market is only as low as the cheapest available ship.
I see. Where do you see at this point the floating storage as a percentage maybe of the fleet?
I mean, it very much depends on the segments, but overall, I think we are basically peaking now, and I think the level is about 200 million barrels. And I would say on the bigger ships, then it's probably 8 to 10% of the fleet that is in some shape or form involved in floating storage. And this number does not go down to zero. You have floating storage that will happen in any case, and that could be blending of fuel grades. It could be storage for other reasons. So I reckon there's about 5% of the large tanker fleet is being held up on storage that normally does not take place. Okay.
So in light of these situations, two questions about those tanker rates. How do you see them evolving and I know it's you're looking at your crystal ball, but how do you see those rates evolving in Q3 and Q4, and maybe how do you see the tensions between the US and China affecting those tanker rates?
I think Q3, we're already starting to book Q3. So we've got some visibility, and we're booking the VLCCs in the 50s, and I expect it to bounce around these levels. So there could be some room down. It could also be come up to 60, 70. But I think average will be pretty decent. The average we had on VLCCs in 2019 was $36,000. So I wouldn't be surprised if the summer of 2020 beats that. And coming into Q4 and sort of a general market overall comment, I think we're much more sort of towards a normal market now. We'll see some destocking. It's already started on the Aframaxes, and we're going to see that on the bigger ships as well. And I think as we come out to August, September, I think the productions will, because I'm now a believer that the demand is coming back quickly. We see the stats, right? We saw that the US gasoline consumption was up almost 9% last week. It's up 15, 16% in the last month. So on the demand side, stuff is definitely happening and it's real. And so coming into the autumn, I think we're going to have more a normal market where the tankers here are used to position the northern hemisphere for the winter. So Q4, I would not be surprised if Q4 is a strong quarter.
Right now, you over the last 2 months or so, what was in the headlines was in terms of the production cuts was that, as you said, they cut the production. But now, if we're moving towards normalization, like you suggested, wouldn't you expect those cuts to get reversed?
I think so. And obviously, we have an upcoming OPEC meeting now. My guess is, and I'm certainly not an expert, I'm sure there's many listening in that will have a more educated view on this. But here's my simple view, and that is that we're not going to get anything official now. Is my guess. But what I do think will happen is that you will see less compliance with the cuts. So, i.e., you will have some cheating here and there, and there are certain places now. For example, West Africa. Certain producers will now achieve 4 times more per barrel of oil versus the bottom only 6 weeks ago. At the bottom, the flat price was not just low, they also had to offer discounts to the flat price, quite large ones, to sell the oil. So I reckon there's going to be some oil coming out, and this will then obviously help the market. And I will not be surprised at all if we look back at 2020, that May and June were the lowest months in terms of oil volumes.
Okay, interesting. That kind of brings me to the next question, because if you're saying that it could have been the low, let's talk a little bit about the cycle or super cycle, because a lot of people that follow this sector are obviously very aware of how cyclical it is. And when reading about the prior cycle from 2003 to 2008, people like to use Frontline as an example of what can happen when they time it right. Like, can you kind of walk us through like this cycle that happened at that point and how it affected Frontline, and maybe compare it to what could happen in the future?
That's a really good question. I mean, looking back at the various cycles, though, it's very seldom that people ask this question. I think it's very good. So let's start with Frontline. So Mr. Fredrickson had just listed the company in the US, 2001. Never afraid of risk, and he was building the company, and he was not afraid of running spot, and he was not afraid of saying no to cargoes. So coming into 2003, when these earnings started to virtually explode, and through to 2008, I think there's one single factor that needs to be put attention towards, and that is that this period was the growth period of China, which was extreme. So you had a 20% seaborne import growth annually. And that is a simple way. If I want to explain to my kids why that cycle happened, that is all I need. That is the main reason. And at the time, if you want to build ships, it would take time. The capacity was not there to sort of build volume. So you had a cycle that lasted. And I think in terms of ships now, if we were to come into a super cycle now, it would be easier to build ships. The capacity to build ship is obviously much higher now, which means that the market is more efficient. So then you'll have shorter cycles. So I'm not going to get into too much on the new building side, because I've got a few factors that point towards the order book remaining low, but I'm sure we're going to touch on that later on the call. But generally here, I think the market's more efficient. So super cycles, we can definitely go into, and we've had some very, very short ones here recently. But the longevity of them, it will be challenged because of the capacity to build.
What was the last thing you said? Because of
the capacity to build ships, it's much higher now than it was during the 03-08 period.
Oh, okay. And now, one of the questions that I got from the readers is that, considering that everyone, ship owners and analysts, expect a new super cycle to start in a few quarters or years, wouldn't that kind of belief prevent scrapping and hence delaying the super cycle?
Yeah, it's a great question. But this one is, I think it's one of the easier ones to explain, because if you look at the overall fleet now, 25% of the fleet on VLCCs is above 15 years. Those are the scrap candidates. And if you asked me only a few months ago, I would say there will be zero scrapping in 2020. But I think now with what's with the change in the oil markets, I expect scrapping to happen in 2020. And the reason is that waiting for a cycle or a super cycle on a ship that's 18 or 19 years old will have a cost. You will have to take through dry docks or special surveys, and these costs could be quite high. And it's also a fact that our customers, basically 8 or 9 out of 10 cargoes, will have a max 15s preference. So even if the market was to be strong in 2 years, or a year, if you have an 18 or 19-year-old ship, there will be costs in the meantime, and it will be very, very short sort of participate, or you will only participate over a very short period of time in the cycle. So there will be some natural scrapping going on here, I think, or starting already this year.
Okay, so what you're saying is that when you have a customer that needs to ship something, and eight out of 10 times they will prefer to use a ship that's 15 years or younger. Am I getting that correctly?
Correct, correct. And this is one of the strengths of Frontline. We've gone through a complete three-year fleet renewal. The average age of our fleet now is just over 4 years.
Yeah, okay. So that brings me to another question, because and it's more a little bit on the capital allocation part, because your fleet is the youngest out of all the competitors that I saw. Uh, some of your competitors have a similar leverage profile as Frontline, and some of them are choosing to delever, where Frontline is choosing to pay a dividend. So the question about this: are you comfortable paying dividend because your fleet is so new and therefore has so many years to earn its ability to pay down the debt in the future, or are you doing it because you are more optimistic about the future?
I think there's a combination of many factors, but I'll go through a few. First of all, the balance sheet of Frontline is the best we've ever had. Secondly, the fleet of Frontline is the best we've ever had. The backing from Mr. Fredrickson is second to none, and it's unquestionable. And this gives us advantages that other owners, I would say, do not have. Access to finance. We've just refinanced a few of our ships, and we did that below 200 basis points. The cash break even of the company is down to 18,700. That's an all-in number, and it does not include the time charter coverage we've taken. So the time charter coverage would bring that down further. So we know well, we have pretty good coverage here for this year, and we have some for next year. So we're in a very good position. And for us, the cash break even level is much more important than the LTV. Our LTV is also down, but we're very comfortable with where we are at the moment. And I think overall we might have a more constructive view of the tanker market going forward. And that's also why we remain highly exposed to the spot market. And the single reason why we have the constructive view, I mean, there's a lot of attention here on the inventories and draws and so forth, but I think the market overall is overlooking the fact that the supply of ships here going forward, the order book is the lowest since '97. 25% of the fleet is above 15 years. The highest average age we've had on the tanker fleet in sort of recent decades was 2002, where the average age was 9.95 years. We are now at 9.5 years, so we're closing in on the sort of the 10-year mark. So there are some factors here on the supply of ships that I feel is being ignored, and that is a very important factor in determining where things will be going forward. But on the risk side, it's obviously ordering ships. That could happen. It remains very low, and I think that will remain the case because it's difficult to get finance. What propulsion do you choose? IMO 2030. And so forth. So there are various factors that are in favour, but risks are also important. And the other risk is the oil demand. We came into the year with 100 million barrels consumption in the world. We dropped down significantly in Q2. I'm not sure where we are now, but say we're in the 90s again. And the tanker market will want to get back to 100 million barrels quickly. And that, I think, is the big question mark in terms of the views going forward. Order book is one, and the second is oil consumption. How quickly does demand come back?
Mm-hmm. You mentioned that your all-in break-even is about 18,000. Does this include debt?
Correct.
Interest? Okay.
Everything. So the exact number, Marius, is 18,700, and for every $1,000 above 18,700, then Frontline makes $23 million on an annual basis.
Okay, thank you for that number. Um, you talked a bit about the age of the fleet, that about a quarter of it is 15 years or older. Now, when it comes to the storage that happened, uh, a lot of the older vessels were the first ones to go for the floating storage, and at some point when it comes back, let's say you have a ship that's 17 years or older that will come back from the storage. Do you see such a ship going back to the transportation use, or do you think it's going to get scrapped? And if it does go back to the transportation, do you see it going through dry docking?
So the storage very much depends on how long you've been storing for. So, and also where you have been storing in the world. So if there's growth on the ship, you'll have to clean the hull, and that can be a pretty big job. So what I can say is that if you've been storing for say a year, then it'll be a pretty big job getting back. We've had a ship storing now for about 2 months. That's going to take us about 2 days to get ready again. No docking required, the dockings on ships here will happen according to the schedule, which is when it's 5 years old, 10 years old, 15 and 17 and a half. The one commercial challenge you will have when coming back from long-term storage is also that your inspection report will have expired. And when the last inspection report is more than 6 months old, then you'll have to do a discount to find a cargo. So it's difficult commercially. But say a ship that's 18, 19 years old now and has been storing for 1 or 2 years. That sort of ship is very, very likely to have head for scrap.
Okay, okay. Um, let me ask you a question about the sensitivity of rates, because I think that's harder for people to understand. Let's say you have a VLCC spot rates going from 25,000 a day to 50,000. Like how many ships would have to be unavailable for such a difference in the tanker rates?
Putting a number on it, Maris, is very, very tricky. So I can't give you sort of an X number of ships. So our market is, like any negotiated market, is very much driven by trends and sentiments. All the owners and brokers and charterers watch the level of activity very closely. So when activity picks up, then rates normally do as well. And I think like now the market is showing strength despite the volumes coming down. But that I believe is driven by a lot of ships now being delayed due to COVID-19 and discharge delayed due to ullage or availability of tanks and so forth. And also I think we have a factor now that I mentioned earlier, which is that all the tanker owners have made a lot of money here in the last 2 quarters, and that makes you more stubborn and you hold up for better rates. So I can't give you a figure as for the sensitivity. It is very much a trend and sentiment driven market.
Okay. Um, Let me ask you about a little bit about maybe future production. Um, there's different countries that are major producers of crude, and over the last however many years, U.S. shale became a major contributor to the overall production profile. And U.S. shale production is obviously more costly than the one in the Middle East, and we know that the shale production is such that the production happens in the earlier months, and then it declines very fast. And in order to keep that production up, you have to keep on drilling. But because of the recent demand destruction, there hasn't been much drilling, or the drilling has been reduced. Now, do you see, uh, lower U.S. shale production in the future because of that?
So we don't do our own research on this, and I think also there's going to be many on the call here that have a more educated opinion on this. But we obviously follow it closely enough, and what we're seeing on reports now is that certain production is actually coming back. There's been obviously a major drop, and I think it's very much the answer to the question is really where the price is. We've now seen Brent above 40, which is a very big surprise to me. But strong oil price here will see volumes return. It's a simple answer, I think.
Okay. And you said a little bit about IMO 2030. I mean, how is the industry and maybe Frontline preparing for that? Is this a wait and watch phase, or do you have any thoughts on that?
So we've also just done the IMO 2020 transition, and we have now the IMO 2030. In simple terms, is that the CO2 emission will be down by a minimum of 40% versus 2008 levels. I think now with future orders, obviously you will plan accordingly. We don't have any plans on ordering ships. We would rather buy ships that are on the water and not add to the order book. Obviously, it's something that we will prepare here going forward. But we feel it's certainly not a wait and see. We're more responsible than that. But we do feel we have time, and then we can test out and see what the other participants in the industry do, and then make the planning as we go ahead.
Okay. Thank you. Let me ask you a few questions about scrubbers. What are your thoughts on IMO 2020 and its impact on the spread between the high sulfur fuel and low sulfur fuel?
So this scrubber thing is something we decided basically to go 50-50 scrubber, non-scrubber. So we sort of hedged ourselves. We've had a payback. We've probably paid back half our investment so far. I am surprised at how well the bunker industry and the oil industry has been prepared. I did not expect the low sulfur fuel to be as available as it seems to be. So I think there's been a lot less IMO 2020 problems certainly than we expected. At the same time, I think a lot of the attention has been in the market has been on other factors, given the roller coaster ride we've been on this year. So in terms of the spread, it's obvious that the spread, when the flat price comes down, then the spreads come in, and the same happens when the flat comes up. But we're seeing now with the flat price increasing that the spread is not going back to where it was, but it is now giving us a quick sort of payback on our scrubbers, and we'll see here. I think the spread will be enough so that we get our payback within 2022. But overall, it's not been we did a lot of planning for 2020, and we started in 2017. And to be honest, I don't think IMO 2020 has played out to the extreme that we expected. We expected the spread to really go out, and it didn't happen. The industry was better prepared.
At what level of a spread? I mean, how high does the spread have to be for the scrubbers to become economical?
In order for people to order scrubbers for existing ships, I would say a minimum of $150. They're probably even closer to $200. And if it's for a new building, it's lower. But it's very much dependent on the individual ship. And the simple rule is the more bunkers the ship burns, obviously the quicker the feedback is. No, sorry, the payback is.
Frontline acquired a scrubber company. Why did Frontline do it? Does it give the company any advantage over its competitors?
I think it did, and we're quite a stake. So we own 17% of a company called Clean Marine, and that investment was a very small investment. but it did give us some returns there because we obviously delivered to other owners. But it was part of our planning when it comes to being prepared and being first in line to get a scrubber. I don't think the oil price is going to head to $80 anytime soon. But say it did, something extraordinary happened, like it seems to happen quite a few times so far this year. Something extraordinary happened, and then suddenly scrubber economics were straight back. Then we would be able to, given that we are participants in this factory, we could start building a scrubber tomorrow. We have all the drawings, we have all the steel, and we could have access to scrubbers extremely quickly.
Okay. Finally, let's circle back a little bit about capital allocation questions. So, in general, what is Frontline's overall philosophy on returning money to shareholders? Obviously you're paying big dividends, but is it more, big dividends, or buybacks, or paying down debt? Could you just talk about it in general?
In terms of, I think just look at the history. We've now paid back more than $6.3 billion. And the balance sheet is in a great position. Our cash break even, as I mentioned several times, is good. So we obviously, the buybacks could look interesting, and it's not something that we normally do. What we like to do is to pay out the dividends and then let the investors have the choice. So I expect here that for the future that the board will keep up this philosophy of paying back to the investors and build on the 6.3 billion, and hopefully we'll pass 7 here within a year or maybe 2. So it's I think that the company is in a very good position to do so.
Okay. When it comes to capital allocation, obviously people want to talk about dividends, buybacks, and debt reduction, but what about M&A activity? Would you see Frontline maybe acquiring a smaller player that may be trading at less than net asset value, or do you see M&A in general in the industry happening?
I think it's been surprising to me how little activity we've seen so far this year, even when the market was very strong. I think I'm a strong believer in consolidation. So that and we are in a position to consolidate. So, but normally our stock trades at a premium. It trades at a discount now, so it's less likely now. As a general sort of comment to everyone on the call of why we're trading, I get that question all the time about the discount and so forth. I think a lot of people have this volatility so far this year has scared a lot of people off. I generally think that if earnings or average earnings on our ships was 25% lower, but much more stable through the first half of 2020, I wouldn't be surprised if the stocks were 25% higher. Generally, we trade over time, and we've been trading at like 1.5 times NAV, and then we're in a position to do like, for example, we did last year when we acquired 10 Suezmaxes from Trafigura. So it's a very accretive transaction where we issued shares rather than cash, and that sort of deal. The premium comes and goes. I'm sure it's going to come back like it always does, and then we will certainly be players. What we would not be keen on is to add to the order book. We will be much more inclined to ships on the water for sure.
Okay, so from what I'm understanding is if let's say Frontline were trading at 1.5 times net asset value, then you might look into using the stock to either buy a competitor or individual ships. But let's say Frontline is trading at 1.5 times book and a competitor is trading at 1 times book. Obviously, that would be accretive to Frontline. But what about a situation when Frontline is trading at 1 times book, but the competitor is trading at 50 times book? Wouldn't that also make sense?
Yes, on paper, but normally you'll find that the company that trades at a half of NAV is trading there for reasons which makes the transaction tricky.
Okay. In 2008 and 2009, when the companies were making a lot of money and it was just towards the end of the super cycle, the industry overall overbuilt vessels. And that's why we had such a long bear market. Uh, do you see something similar happening again?
My honest reply to that is no. I don't think it will happen again, Marius. And looking back at it's like just over a decade ago, the order book in 2009 was 50%. It was so extreme, and we come out of the super cycle, and it was crazy. And now we're down to an order book of about 8%, which is the lowest since '97. And that brings me back to the supply side. I think the supply side of ship supply, that's really where we all need to draw our attention, because that is the sign to me, and it's the proof that there is reason to think or to have a constructive view going forward, because that's where we'll see the positive action. And I don't think we're going to have a sort of an order boom for other reasons as well. I mentioned it briefly, but finance is available to Frontline because of our history, but also because of the backing of Mr. Fredrickson. And not many people enjoy that same position. So finance is trickier. And then what ship do you order? IMO 2030. People are reluctant, and I think there's another factor now that is not often. We haven't had it for a long time. If you look at the last decade, oil consumption in the world was increasing on average pretty steadily at 1.5% per year. Now there's a big question mark on how oil consumption will develop. So we've just been through a pretty big setback in terms of consumption, and it's now there could be say for example the airline industry is 8% of the world oil consumption, so that will take time to come back. Personally, I think that gasoline will be an outperforming grade in terms of consumption, so that's going to take some of the shortfall. But the big question mark is the consumption, and I don't think many think that 2021 will be like way over 100 million barrels a day. So that's another reason why people will be reluctant to build ships, because we will have a setback on consumption for sure.
I heard one of the CEOs or investors, I don't remember who it was, but saying that when the overbuild happened in 2008, 2009, people like to blame the the CEOs of oil tanker companies for doing that, but actually one of the major contributors to overbuilding was that private equity came in and financed it, and even did it themselves. And I don't see much private equity in the sector at this point. Do you?
No, there aren't. That was certainly right, and most are out. And if you go back one more cycle, then you would see there was a lot of German KG money, basically dentists and doctors in Germany, the pension funds. They were building a lot. So there's, in every cycle there's some sort of sort of entrepreneur, surprising sort of players come in. So that's been the two last cycles. So what's going to happen in the next one? Yeah, let's see. But it looks. I'm not going to say it's different this time, but it looks different in terms of the ordering appetite going forward. I think it will be subdued. Which is very, very encouraging, of course.
Yeah. When I did a previous interview with someone else, and one of the questions that was submitted was, "Are you afraid of private equity coming in, buying up some of these oil tanker companies and liquidating them for a profit?" And the person just kind of started laughing and said, "Private equity only comes in at the top."
Yeah, exactly. And probably second that. I don't think that's a big risk. But just back to your previous question, I like to be honest, and just if I do mistakes, I'll be the first one to say. So this year there's been, in terms of the market developments, a lot of surprising factors. But back to building, I think the various oil tanker companies, we will have to take our part of the blame as well. We have ordered a lot of ships. In Frontline alone, we've had more than 30 ships delivered in recent years, and that's obviously why our fleet is averaged at just over 4 years. We've gone through a complete renewal of the fleet, so that has given pain. 2017, 2018 were quite painful years, but because of the low cash break even, we only lost a fraction of what we made the years before. So overall, we have a very, very solid model, but we are also to blame here. But what we're now doing in Frontline is to focus on ships on the water and not adding to the order book, because again, I keep repeating it, but it's the supply side here. There will be of ships. There will be the positive supplies. I am absolutely convinced, and I also think that the fact that we're turning in the oil markets, we're going to inventory draws this quickly. Yes, we're not going to get as stronger rates over the summer as I was expecting, but it means that the pain of drawing inventories will be shorter. So we're going to head back to a more normal tanker market. So if we have oil demand come back and the ship supply stay where it is now and only increasing a little bit, some scrapping in play and so forth, I think we're heading into some pretty. I'm certainly not going to say super cycle, but decent earnings. And as I said earlier, for every $1,000, we make 23 million above the 18.7. So if there's anyone to sort of in position to generate significant earnings, Frontline's there.
Yeah. Okay. Fantastic, Robert. I don't have any more questions. Is there anything that you would like to add that that maybe we didn't discuss or I didn't ask you before we wrap it up?
No, we give great questions, and it's good run through. And yeah, I remain constructive, as I said. I was even on a call here 2-3 months ago where I said that if this market goes back and stays over prolonged periods at the levels seen at the bottom, where we were down at $15,000-$20,000 end of January, early February, then I would walk from Oslo to Bergen, which is about 300 miles. It's something I'm still confident about. So I reckon we're going to have a bumpy summer, but averaging decent. And I think investors have a great time in terms of risk reward. There's always risk involved with oil tankers. We see the volatility, but the levels that the Frontline's priced at now, I think the risk reward looks pretty decent. Balance sheet is great. We have the backing from Mr. Fredrickson. So I think, yeah, I'm very happy about where things are and excited about what's ahead of us.
Okay, well, thank you very much for taking the time and doing this interview. And yeah, and maybe sometime in the future we can do it again. Thank you very much.
Yeah, we'd love to. Thank you very much.